You're about to take another trade. Your setup looks perfect. Everything aligns. You enter with confidence, and then you watch it fail. Again. So you tell yourself, the strategy needs work. Maybe different indicators. Maybe a tighter stop loss. Maybe you just need to study more. But here's what nobody tells you. Your strategy isn't the problem. You are. I spent 8 months convinced I was one adjustment away from profitability. Better entries, tighter stops, different time frames. I tried everything. Then I realized something that changed everything. I wasn't losing because my analysis was wrong. I was losing because the person executing that analysis was fundamentally unprepared for what trading actually demands. There are 3 specific psychological demolitions every profitable trader must survive. Not learn about, survive. Most blow up in the first one. The few who make it through often quit in the second. And the rare traders who reach the third stage, they become unrecognizable. Not because they learned more, but because they became different people. By the end of this video, you'll know exactly which stage you're stuck in and what needs to die inside you before you can move forward. Because the brutal truth is this: you can have the perfect strategy and still fail at every stage if you haven't killed the right parts of yourself yet. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Stage 1 begins the moment you take your first real loss. Not a paper trading loss, not a demo account setback. A real loss where actual money disappears from your account and you feel it in your chest. Most traders enter the market with a dangerous assumption that intelligence translates to profit. You've succeeded in other areas of life. Maybe you're good at math. Maybe you've built businesses. Maybe you've read 50 trading books and spent months studying charts. You think you're prepared. You think the market is a puzzle, and if you're smart enough, disciplined enough, analytical enough, you'll solve it. The market exists to destroy that assumption completely. Here's how it happens. You take a trade based on perfect analysis. You've checked every condition. Support levels align. Volume confirms. Your indicator signals are pristine. You enter with confidence, and you watch it fail. Not catastrophically, just enough to sting. So you tell yourself it was a fluke. Markets are probabilistic after all. You take the next trade with even better analysis. You've learned from the mistake. You've tightened your criteria. It fails again. Now you start questioning things. Maybe it's your risk management. Maybe you're entering too early. Maybe the time frame is wrong, so you adjust. You add another indicator to filter false signals. You study more. You refine your entry technique. You paper trade until it looks perfect. Then you go live again. And you keep losing. Not every single trade, which would almost be easier to accept. You win just enough to stay hopeful. Just enough to think you're almost there. And you lose just often enough to slowly bleed your account dry. This is the torture of stage 1. It gives you hope in measured doses while systematically destroying your capital and your confidence. Most traders respond to this by doing more. More indicators, more analysis, more time studying charts. They switch from candlestick patterns to Elliott wave, from Elliott wave to supply and demand zones, from supply and demand to order flow. They follow signal providers. They buy courses promising the institutional edge. They join Discord groups where everyone shares their wins but never their losses. And through all of this, they're missing the actual lesson. The lesson isn't technical. It's not hidden in some indicator combination you haven't discovered yet. The lesson is brutal and simple. You can do everything right and still lose. Not sometimes. Often. You can have perfect analysis, flawless execution, textbook risk management, and the market will still take your money 5 times in a row. This isn't a bug in your system. This is trading. Think about this clearly. When you hit your take profit 5 times consecutively, you don't find it strange. You don't think something exceptional happened. You just think your strategy is working. But when you get stopped out 5 times in a row, despite doing everything correctly, it feels like the end of the world. It feels like proof that you're broken, that your strategy is broken, that you need to change everything. But both scenarios are equally probable. Both are normal expressions of randomness within a probabilistic system. The difference is how your ego interprets them. Wins confirm your intelligence. Losses attack it. And until you can experience both with the same emotional neutrality, you cannot escape stage 1. I spent 8 months trapped here. 8 months of thinking I was one adjustment away. One more piece of the puzzle. I studied volume profiles until I could read them in my sleep. I learned order flow, institutional positioning, market internals. I built spreadsheets tracking correlations across 12 different asset classes. I had algorithms scanning for specific pattern formations. And I kept losing. Not catastrophically, which would have forced me to stop. Just consistently enough to drain my account slowly while I scrambled to find what I was missing. The day I escaped stage 1 wasn't the day I found a better strategy. It was the day I sat in front of my screen after another losing trade, a trade I'd analyzed perfectly, entered correctly, managed flawlessly, and said out loud to my empty room, "I have no idea what I'm doing." That admission broke something fundamental inside me. Because until that moment, I'd been operating under the delusion that knowledge equaled control. That if I just understood the market deeply enough, I could predict it accurately enough to win consistently. But that's not how probability works. You don't understand a coin flip into landing on heads. You accept that it's 50-50, and you manage your risk accordingly. This is what stage 1 actually teaches you. Certainty is a delusion. Being right doesn't matter. Being smart doesn't protect you. The market doesn't care about your analysis. It doesn't reward hard work or intelligence or preparation. It only rewards those who can accept uncertainty and execute anyway. Most traders never make this admission. They keep believing they're one indicator away, one course away, one mentor away from figuring it out, and they die in stage 1 still convinced they almost had it. Still thinking the problem is technical rather than psychological. The traders who survive stage 1 are the ones who can genuinely say, "I was completely wrong about everything," and mean it. Who can stop searching for the perfect strategy and accept that every strategy, no matter how good, will lose. Often, sometimes 5 times in a row, sometimes more. When you truly internalize this, something shifts. You stop trying to be right. You stop trying to predict. You stop adding indicators, hoping one more filter will eliminate losses. Instead, you start asking a different question. How do I execute a probabilistic edge consistently, even when I have no idea what will happen next? That question pulls you into stage 2. And stage 2 is where a completely different kind of torture begins. Because in stage 1, you were losing because you kept doing things wrong. In stage 2, you're losing because you can't stop doing things. You've accepted that you can't predict the market. You've understood that being right is less important than being disciplined. You've built a system with clear rules. You've defined your edge. Maybe it's a specific pattern at support with volume confirmation. Maybe it's a breakout structure with institutional backing. Whatever it is, you've tested it. You know it works. You have your criteria. And then you sit down to trade and discover the most painful truth of stage 2. Your edge appears maybe twice a week. The rest of the time, there's nothing to do. Nothing. You watch the market move. You see patterns that kind of look like your setup. You see other traders posting wins on moves you're not taking. And every part of your brain screams at you to do something, to take action, to be productive, to justify the hours you're spending staring at charts. This is where most traders who survived stage 1 die, because they can't tolerate doing nothing. They've spent months building a system. They've survived the humiliation of stage 1. They know what their edge looks like. But sitting there watching the market move without participating feels like failure. It feels lazy. It feels like they're wasting time. So they take marginal setups. Just this once, they tell themselves. It's close enough to my rules, it's not perfect. But it's still a decent probability. And maybe it works, which makes everything worse. And because now their brain has evidence that breaking rules can be profitable, so they do it again. And again. And within weeks, they're back to trading randomly, justifying every deviation with post hoc reasoning. The context was similar. The structure looked good. I felt confident. All the discipline they built in stage 1 evaporates because they couldn't handle the boredom of waiting. Here's what's actually happening. In every other area of life, doing more equals achieving more. More hours at work, more output, more practice, more skill, more effort, more results. Your brain has been trained since childhood to believe that productivity requires action. But trading is different. In trading, more action equals less money, because trading consumes mental energy excessively. Every chart you watch, every setup you analyze, every marginal trade you consider, it all depletes your finite capacity for rational decision-making. And when your best setup finally appears, you're too mentally exhausted to execute it properly. Taking trades outside your system, even when they work occasionally, destroys your edge over time. Because you're no longer executing a statistical advantage. You're introducing randomness. You're turning a profitable system into break-even noise. You know this intellectually. But sitting there, doing nothing while the market moves feels unbearable. It feels like you're not really trading, like you're missing opportunities, like you're failing to capitalize on the time you're investing. And here's the deeper problem. Most traders are emotionally dependent on the market. They need it to feel complete, to feel successful, to feel productive. The market becomes their source of validation. So the idea of watching charts for 8 hours and taking 0 trades feels like a wasted day. Like they've failed somehow. But the traders who reach elite levels, they're not dependent on the market at all. They just watch. They keep watching until a trade screams at them to take it. Everything is crystal clear. It's an A+ setup with no reason not to take it. And they think, if I don't take this one, what trade will I take? There's no dependency. They feel complete without the markets. They feel successful. They feel productive. Because they've redefined what productivity means in trading. I spent a full year trapped in stage 2. A full year of knowing exactly what I should do and being completely unable to do it consistently. I had a system that worked. I'd backtested it across 3 years of data. I had clear rules. I knew my edge appeared roughly twice per week on average, but I couldn't sit still. On days when my setup didn't appear, I'd find reasons to take other trades. Just small positions, I'd tell myself, just to stay active, just to not waste the day. Every single one of those trades made my results worse. Not because they all lost, some won, but because they introduced randomness. They broke my statistical edge. They turned a profitable system into break-even noise. More importantly, they wore down my psychology. Each deviation from my rules made it easier to deviate again. Each marginal trade I took reduced my ability to make correct decisions on subsequent trades. I was poisoning myself by exposing my brain to too many charts, too many decisions, too much stimulation. And the day I escaped, stage 2 was the day I sat through an entire trading session, saw 5 setups that didn't quite meet my criteria, and took 0 trades. I closed my platform at the end of the day, having done nothing. And instead of feeling guilty, I felt proud. That shift, from feeling lazy about inaction to feeling disciplined about inaction, was everything. It was a signal that something fundamental had changed inside me. In the following days, I didn't feel strange about not taking trades. There were days I'd watch charts for hours and close without doing anything. And I'd feel adequate, successful, productive. Because I'd finally understood what stage 2 actually teaches. Patience isn't passive. Waiting isn't wasting time. Doing nothing is often the highest conviction trade you can make. If this resonates with you, if you're recognizing yourself stuck in one of these stages right now, do me a favor. Hit that subscribe button. This channel exists to document the psychological reality of trading that nobody else talks about. No hype, no false promises, just the uncomfortable truths that separate the 5% who make it from the 95% who don't. Turn on notifications because the concepts we're covering here aren't taught anywhere else. The market will always offer another opportunity. Always. Tomorrow, next week, next month, there will be another perfect setup. But your capital and your mental focus are finite. You have limited decision-making energy, limited emotional resilience, limited capital to risk. The traders who survive stage 2 are the ones who've internalized this deeply. Who understand that preserving capital and mental energy for the moments that truly matter is more valuable than staying busy. Who've killed their addiction to constant action. Who can watch the market for 8 hours, leave with nothing, and feel successful. These are the candidates for reaching elite trader level. The number of people who can actually do this is extraordinarily small. Most traders know what they should do. They just can't sit still long enough to do only that. But if you survive stage 2, if you truly kill your need for constant action, something almost mystical happens. You enter stage 3. And stage 3 is the strangest of all because in stage 3, you don't learn anything new. You don't develop better strategies, you don't find hidden edges that nobody else knows about. Instead, your relationship with the market fundamentally changes. After thousands of hours, after hundreds of trades, after surviving the humiliation of stage 1 and the boredom of stage 2, your brain starts recognizing patterns at a level deeper than conscious thought. You look at a chart and you know. Not because you've analyzed it, not because you've checked your indicators, you just know. This isn't mystical intuition. It's pattern recognition that's moved from conscious processing to subconscious automation. The same way a master pianist doesn't think about which fingers to move, A stage 3 trader doesn't think about whether to take a trade. They see their setup and they execute. No deliberation, no second guessing, no fear, just recognition and response. There's no such thing as going outside the system anymore. Because you've become the system itself. You see your strategy and you execute. Everything is clear. There's no room for question marks. The internal battle of, will I break my discipline today, is over. You've become a different person and left those struggles behind. But here's what nobody tells you about stage 3. Here's the cost that most people don't expect. Trading becomes boring. Deeply, profoundly boring. The excitement is gone, the adrenaline is gone, the emotional highs of winning and the devastating lows of losing, all gone. You see your setup, you take it, you manage it according to your rules. You exit, it's routine, mechanical, emotionless. And for most people, that boredom is unbearable. They've spent months or years fighting to reach consistency. They've survived the psychological demolition of stage 1. They've killed their action addiction in stage 2. They've finally reached the flow state where trading feels effortless. And when they get there, it feels empty. They miss the chaos. They miss the drama. They miss feeling something. So they sabotage themselves. They start taking trades outside their system again. Not because they don't know better, they do. But because boring feels wrong. It feels like they're not really trading anymore, like they've turned into a robot. So they start pressing buttons just to feel emotions. They increase their position sizes to get that adrenaline back. They take marginal setups to recreate the challenge. They'd rather have excitement and lose than have boredom and win. This is the final test of stage 3. Can you accept that profitable trading looks nothing like what you imagined? That it's not thrilling or validating or exciting? That it's the repetitive execution of the same simple edge over and over? Most traders who reach stage 3 still fail here. Not because they can't trade profitably, but because they can't tolerate how boring profitable trading actually is. I've been in stage 3 for 2 years now. And I'll be honest, some days I miss the chaos. I miss the intensity of stage 1 when every trade felt like life or death. I miss the challenge of stage 2 when resisting bad trades felt like an accomplishment. Now trading is just part of my routine. I see my setup maybe twice a week. I take it. It works or it doesn't. My account grows slowly, steadily, boringly. No dramatic wins, no devastating losses, just compound growth over time. And that boredom is exactly what I fought years to achieve. Yeah, because boring is profitable. Exciting is expensive. The traders who make real money, who last for decades, who build genuine wealth through markets, they're all bored. They've accepted that trading isn't entertainment. It's a business. And businesses succeed through boring, consistent execution of proven processes. For a small minority, trading can still be enjoyable at this stage. But most feel nothing. They do their job and close the screen. That's all. But they don't care how they feel anymore. Because they've become able to make money they couldn't even dream of once. Success has become ordinary and routine. This creates a satisfaction that's deeper than emotion. You might not experience an instant burst of excitement, but there's a profound contentment in knowing you've mastered something that breaks 95% of people who attempt it. Here's how you know which stage you're in right now. If you're constantly changing strategies, convinced the next approach will be the one that works, you're in stage 1. Your certainty hasn't been killed yet. You still believe the problem is technical rather than psychological. If you know what you should do but can't stop taking trades outside your system, you're in stage 2. Your need for action hasn't been killed yet. You're still dependent on the market to feel productive. If trading feels routine and boring, and you're tempted to spice it up with larger positions or different setups, you're in stage 3. Your need for excitement hasn't been killed yet. You're sabotaging profitability because it doesn't feel significant enough. Each stage has its own death. Stage 1 kills certainty, Stage 2 kills impatience, Stage 3 kills ego, and you cannot skip stages. You cannot rush through them by reading about them or understanding them intellectually. You have to endure each one fully. You have to let each stage break what it needs to break inside you. Only then can you move forward. Most trading education focuses entirely on knowledge. Learn these patterns. Use these indicators. Follow these rules. Master these entries. And none of that addresses what actually stops traders from succeeding. What stops traders isn't lack of knowledge. It's inability to survive the psychological demolition required to use that knowledge effectively. You can know the perfect strategy and still fail in stage 1 because your ego can't handle being wrong repeatedly. You can have impeccable analysis and still fail in stage 2 because your brain can't handle inaction. You can have years of experience and still fail in stage 3 because you can't accept that success is boring. The stages aren't about what you learn. They're about what you become. And becoming a profitable trader requires killing parts of yourself you thought were essential. If you're in stage 1 right now, losing consistently despite your best efforts, understand this. You're not failing. You're being educated. The market is teaching you humility. Let it. Stop fighting the lesson. Stop thinking you're one tweak away from success. Accept that you know nothing and start rebuilding from that truth. If you're in stage 2, knowing what to do but unable to execute consistently, understand this. You're not undisciplined. You're addicted to action. And the only cure is sitting through the discomfort of doing nothing until doing nothing feels normal. Until you can watch charts for 8 hours, take 0 trades, and feel proud instead of guilty. If you're in stage 3, profitable but bored and tempted to complicate things, understand this. The boredom is the point. It's proof that you've mastered the game. Don't sabotage it by seeking excitement. Embrace the routine. Let boring make you wealthy. These 3 stages are not a curriculum. They're a crucible. They burn away everything that doesn't work. Your false confidence, your need for constant action, your addiction to excitement. What's left after all 3 stages isn't someone who knows more. It's someone who is fundamentally different. Someone who can look at uncertainty without fear. Someone who can sit in stillness without anxiety. Someone who can execute the same boring process over and over without needing it to feel significant. That transformation is what separates the 5% who make money from the 95% who don't. Not intelligence, not education, not even hard work. Survival. The ability to endure what each stage demands and come out the other side changed. Most people quit. Most people should quit. This path isn't for everyone. But if you're still here, if you're watching this and recognizing yourself in these stages, you have a chance. Not because you're special, but because you're willing. Willing to have your certainty destroyed. Willing to sit in uncomfortable stillness. Yeah, willing to accept that success looks nothing like you imagined. That willingness is rare, and it's the only thing that matters. You clicked on this video, probably thinking you'd learn about 3 difficult market conditions, or 3 technical challenges you need to overcome. Maybe you expected advanced chart patterns or risk management formulas. But now you understand something completely different. The 3 stages aren't about markets at all. They're about you. Stage 1 isn't about finding the right strategy. It's about killing your certainty and accepting that you can do everything right and still lose. Stage 2 isn't about learning patience. It's about killing your addiction to action until doing nothing feels like success. And in stage 3 isn't about reaching some peak of excitement. It's about killing your ego and accepting that profitable trading is profoundly boring. Most traders spend years searching for the missing piece of technical knowledge, the right indicator, the perfect entry system, the institutional secret. But the real barrier was never technical. It was psychological. You weren't lacking information. You were lacking the psychological demolition necessary to use that information. So here's what I want you to do. Close this video and honestly ask yourself, which stage am I actually in? Not where I want to be. Not where I think I should be. Where am I right now? Because you can't skip stages. You can't rush them. You have to endure each one fully. And if you're in stage 1, stop changing strategies. If you're in stage 2, stop taking marginal trades. If you're in stage 3, stop seeking excitement. The market doesn't care about your effort. It only rewards survival. This is Trader's Bible. I'll see you in the next one.